What's up guys, welcome to the new video. It's me Yash making market simpler for you. Thank you for tuning in every week. To stay updated, don't forget to subscribe to our channel and like this video. In today's video, I'm going to talk about penny stocks. Investing in penny stocks can be a high risk, high reward venture, but for those with a keen eye for market trends, it offers the potential for significant gains. As the market continues to show signs of recovery and growth, certain low price stocks are catching the attention of savvy investors. Among these are a select few penny stocks that are demonstrating strong potential to rebound to the rupees 100 mark. In today's video, I'll delve into 5 such stocks poised for substantial rise, examining their recent performance, market position, and growth prospects. Before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. The first stock on our list is Bodal Chemicals. The company is India's leading integrated dyestuff company and the largest domestic manufacturer of dye intermediaries. It has a market share of 20% in domestic dye intermediaries market and 13% in the dyestuff market. Its global market share is 6% and 3% respectively in the dye intermediates and dyestuff market. The company has state-of-the-art R&D laboratories that it uses to develop new products and processes. Recently, Bodal Chemicals also added benzene derivatives to its product portfolio. The stock has been languishing in the same range for the last few months due to a slowdown in demand in the global market. Uncertainty of the European market has further decelerated the demand scenario of the chemical industry. However, this is expected to improve. The management expects the overall demand scenario to improve after a couple of quarters when the factors distributing global trade are back to normal. Meanwhile, it is working towards utilizing capacities optimally to improve margins. Bodal Chemicals is also adapting to market changes and focusing on efficiency and cost reduction. The management is focusing on reducing debt levels over the next few years. Efficient working capital management has led to improved debtor days as well. Bodal Chemicals expects to maintain similar debtor days going forward. With the new greenfield project expected to commence production, the company also stands to benefit from higher production, which could improve sales and profit going forward. The second stock on our list is Make Money Organics. The company manufactures pigments and agrochemicals through its manufacturing facilities located in Gujarat. It manufactures green and blue pigment products which are used to manufacture printing ink, plastic paints, textiles, leather and rubber. Apart from that, it manufactures a variety of pesticides for crop and non-crop applications. The Make Money Group has more than 30 brands of various pesticides formulations in India. For the financial year 2024, the company reported a 38% year-on-year decline in its revenue, impacted by sluggish global demand and lower product prices. Its profitability was also impacted by up to Rs 700 million due to inventory destocking. However, this is a temporary blip. The company's long-term growth prospects remain intact due to infrastructure and product range. The company's management also expects stabilization in demand in the second half of financial year 2025. It is also anticipating growth in nano urea and titanium dioxide segments. Through the acquisitions of Kilburn Chemicals under the NCLT order, Make Money Organics has recently ventured into the manufacture of white pigment primarily used in paints and coating industry. The company has also ventured into the crop nutrition segment via its subsidiary Make Money Crop Nutrition. This foray makes Make Money Organics the first private player to foray into nano urea fertilizer manufacturing. Going forward, the company remains committed to expansion plans, further enhancing its presence in the global market and solidifying its position as a key player in the agrochemical industry. Moving on, the third stock on this list is South India Paper. The company manufactures paper, paper boards and cartons. It is also into power generation. The company's key products include kraft liners, test liners, machine glazed kraft paper, corrugated boards and wraparound boxes. It operates a kraft paper manufacturing unit and a packaging division captive cogeneration power plant at Mysore. Around 40 to 45% of the paper it manufactures is consumed in the packaging division. In the recent past, losses in financial year 2023 and the recent fire incident at one of its warehouses have put forward some operational issues. Nevertheless, the company has raised capital to fund its recent capex and it expects margins to improve once the new capacity starts operations in full force. The company's debt to equity ratio stands below 1. As per the IPMA, which is Indian Paper Manufacturers Association, the paper consumption in India is on an upward trajectory, expected to grow by 6 to 7% annually. This is expected to reach a staggering 30 million tons by 2027. This positions India as the fastest growing paper market globally, highlighting the immense investment potential in this sector. South India Paper Mills stands to benefit from this consumption trend. Moving on to the fourth stock on this list, Sarla Performance Fibers manufactures various types of polyester and nylon yarns. It has a nylon and polyester product range of over 250 varieties of value-added yarns and threads. The stock price has risen over 60% in the last 6 months. One big reason that could be attributed to the recent run-up could be the company's promoters buying stake from the open market. In the March 2024 quarter, Hindustan Cotton, the promoter group of the company, increased its stake in the company through 4 open market transactions. This move raised Hindustan Cotton's ownership from 56.5% in February 24 to 56.6% as of March 2024. Notably, in the December 23 quarter, Sarla Performance witnessed an impressive 18% year-on-year revenue growth, reaching 963 million. Moreover, it reported a substantial 300% surge in net profit, soaring from Rs 21 million to Rs 85 million. Going forward, the company plans to expand its business, indicating a proactive approach to capitalizing on new opportunities and ensuring future growth. Moving on to the last stock on this list, Roopvela International is the only Indian company which manufactures both talcum and silicone coated rubber threads. The company's products are used in niche areas such as toys, meat packing, medical webbing, and bungee jumping cords. It has also expanded its business to the hygiene segment after acquiring Premier Tissues. Roopvela International currently has a manufacturing capacity of 20,000 metric tons and is actively expanding its capacity to meet the growing demand for rubber threads. In the last 3 years, the company's revenue has grown at a compounded annual growth rate of 17%, led by high demand for rubber threads. The company's net profit has also grown at a healthy rate of 6% during the same period. Notably, Roopvela has consistently rewarded shareholders with dividends over the past 5 years, all while maintaining a debt-free status. This enhances its capacity for future expansion endeavors. Looking ahead, the company is poised to identify its focus on augmenting its export activities, aligning with its growth trajectory. That's it for today. This has been another fun week. Thank you so much for watching. A couple of housekeeping notes. To stay up to date with the biggest market movers and interesting take on the current market trends, subscribe to our YouTube channel. Like, share and subscribe. Really appreciate the support. We have some really exciting things coming for you this month. And that's everything today. Hope you have a great day. Happy investing.